Seeing futures a bit in the red right now after what's been a pretty broad-based rally for the markets in recent weeks. What do you think's doing it? What's putting us in the red today? Is it the Nike results or is there some other factor?
I think certainly Nike has been a little bit of a disappointment. You've got some news on gaming regulation out of China, which isn't positive. That's another example of that government kind of stepping in with surprise regulations that have spooked the market a little bit. But I think you got to be really, really careful, Frank. I mean, we're at the time of the year now where volumes are low, and markets can move a little bit more than you'd think without a lot of fundamentals behind them. It just is a factor of low volume. I think that's what's going on. We've had a heck of a rally in the last 8 weeks.
Yeah, certainly been a great rally. So you're looking for things outside of Nike right now. I know you're also paying attention to Washington, D.C. Senate Majority Leader Chuck Schumer delaying the recess that was scheduled. Give us a sense. Why should investors pay attention to this? Do you think it's actually having a market impact as well?
Look, I think as you look at Washington, it's going to become a bigger story over the course of 2024. I mean, I think that's the story. We certainly have a little bit of an election coming up. The issues that have just gone on in Colorado certainly raise, some questions and risks about that. And I think, as you look into 24, politics are going to continue to play a bigger and bigger role, at least at a headline level. I think when you think about overall where the economy and the markets are going to go, though, the real story here is that inflation's coming down. And I think we're going to get more evidence of that today. The economy is staying relatively strong. And as long as employment levels stay strong and inflation comes down, we think we're biased higher over the course of 24.
All right, so you're mentioning, you're leading me to my next question. PCE coming out at 8:30 a.m. Eastern. Looking at the estimates right now, estimate is for core PCE to come in at 3.3%, a decline from the previous month of 3.5%. Does that give the markets a lot of confidence in your mind, or do we already have the idea that the Fed's going to cut baked in?
Yeah, look, I think Powell was so almost over the top in talking about cuts at the last press conference that what you would need to see to change that market narrative is not just good news. Good news being bad news, that threshold has risen now. It's got to be so good that it threatens the idea that the Fed, would cut. And in the Fed's own projections, the economy is relatively strong next year, and they're still cutting. So I think that bar has been raised. You've gotten some pushback from other governors, but it really hasn't won the day. The story here is that the Fed is at least done. Markets do very well when the Fed is on pause. And if we get a couple of rate cuts in an environment where the economy is still strong, then I think that gives us even more upside because you could get some multiple expansion. So it would need to be a real shocker to change that narrative.
So I want to be clear. You think it's only a market mover if it surprises to the upside. If it comes in anywhere close to expected, Do you think that's already baked in?
I think that's right.